Okay guys, I'm going to still ask you to bear with me. Got a little bit of a cold. I read a story earlier on Bloomberg. Got my blood boiling a little bit. Decided to make a short video about it and share this with you and give you my take on what's going on. I mentioned in one of my earlier videos about capital structures and how important it is for the bankruptcy courts to honor them. And then I read this. A group of Indiana pension funds that hold first lien debt of Chrysler Corporation objected to a plan to auction the company's assets and said a U.S. District Court judge should rule on whether the sale is lawful. The Indiana State Teachers Retirement Fund, Indiana State Police Pension Trust, and Indiana Major Move Construction filed court papers late yesterday and today asking U.S. bankruptcy judge Arthur Gonzalez in New York to block the sale, claiming the sale is illegal and tramples their rights. A hearing to approve the sale to a group led by Fiat, or a bidder that tops its $2 billion offer, is scheduled for May 27th. Gonzalez denied a motion by the funds to stay the sale process while they seek a review by the U.S. District Court on whether the sale is proper. The fund's attorney, Thomas Loria, said after today's hearing that the group already had filed papers with the District Court. The funds also asked for the appointment of a trustee to run Chrysler, saying the company has ceded control over their business and restructuring efforts to the United States Treasury Department, which is using the bankruptcy to reward certain creditors that the government deems politically important, according to one of the filings. The Treasury Department has taken constructive possession of Chrysler and is requiring it to adopt a sale plan in bankruptcy that violates the most fundamental principles of creditors' rights, lawyers for the pension plan wrote. President Barack Obama criticized the non-TARP lenders for refusing to accept an offer that would have paid them about 30 cents on the dollar, saying they forced the automaker's bankruptcy. The non-TARP group abandoned its fight to block Chrysler's sale plan earlier this month, citing political pressure. This is the type of crap I warned about last week. What we are witnessing is the government and the courts sidestepping the law and destroying the rights and the capital of first lien debt holders. Now, if you're asking what a first lien debt holder is, I will explain it like this. Let's say Chrysler currently owns property that is up for auction. This could be a warehouse, land, machinery, or any other asset that was used to secure the loan. The first lien holder, let's say Indiana pension funds, loaned money to Chrysler that was secured by the assets. For example, let's say $5 million was loaned and there is an unpaid balance of $3 million. Then if the auction closes above $3 million, the first lien holder will receive the first $3 million of the auction proceeds, with the balance going to secondary lien holders. Or if the auction closes at $3 million or below, the first lien holder gets it all. They are supposed to get paid first. Remember, these are state pension funds we are talking about. Even the president blamed the bondholders for Chrysler's bankruptcy because they didn't accept an offer of 30 cents on the dollar. Why should they? When Chrysler sold the bonds, they knew the rules. When the pension funds bought the bonds, they knew the rules. Now it seems the government wants to change the rules to reward certain creditors that the government deems politically important. Now this really concerns me. And we can expect to see this same type of crap when GM files bankruptcy, or for that matter, any company that has received or will receive TARP money. Now these poor pension funds invested money in Chrysler bonds because they were supposed to be safe and secure. This idea should send a chill down the spine of every first lien debt holder out there. I can't see any hope for a recovery in the economy or the markets when this type of crap is going on. I truly thought we were a nation of laws. This action says otherwise. Also, there was some word today that the Fed would be increasing the amount of debt that they would be buying. I see this statement as a market primer. What they are looking for is some reaction in the markets, either positive or negative, to these comments. I do expect they will increase the amount from $300 billion in the future. Now, I do have a market summary video that will be coming out this Friday. I want to thank everybody for tuning in, and I look forward to your comments.